Our mission is to teach thousands of people all over the world to be financially free with Forex. Join Team Legend in the Bullish Bear Forex Academy. That's who we are.
Hello traders, it's a one and only Forex skill coach Team Legend, and I'm super excited having you guys on this. Actually, this is meant to be a video for the VIPs, but I'm making it general so that everyone can benefit from it, because not only VIPs get signals, sometimes even in my free channels I do give signals. So in this video I'm going to explain to you a quick way, a safer way to follow signals whenever it's been posted to you, be it VIP or free signals. A safer way to follow signals to prevent losses. Okay, we all know that in the Forex market we always experience what we call pullbacks. There are always pullbacks in the markets. There can always be a pullback that might go longer than your expectation. There can always be pullbacks that might not even get to your expectation and begin to go the right direction you must have predicted. Why sometimes in the Forex markets you can predict a bullish trade and then suddenly you see a bearish trade. So anything can happen in the market anytime, any day, despite the fact that you make your analyses and make all your set all your strategies. There's always tendency for losses and also tendency for winnings. Okay, so I'm gonna give you a quick guide on how to follow signals to prevent some certain losses. Okay, whenever you get signals. So if this is your first time on my channel, could you hit the subscribe button and turn on the notification bell so that you don't miss out a thing. All right, and you want to go straight to the description below and join my Telegram channel, where I post free signals sometimes, and I give teach strategies, and I teach so many things you want to learn on Forex markets. So let's get straight into the business. Okay, now let's say, for instance, if you get a signal, okay, let's say a signal to sell, and now we're going to take, for instance, that this is let's say this is where the entry point was. Okay, so let's say, for instance, a signal comes to you and you're told to sell from this junction. Okay, now you get to notice that if you place a sell immediately as one who is following a signal, all right, there will be a little pullback like this. The market goes up for a while, right, before the sell begins. All right, and that's how Forex move. Okay, you see another retracement, little retracement, another move. Okay, so what I advise you to do as one who is following signals is, whenever you're giving a signal, maybe they say sell so, all right, sell this or sell that. When you hop into your charts with your phone or with your laptop, I don't advise you to just rush into the trade, place a sell or place a buy. You can also make your own cross-checking. Okay, and how do you do that? What you need to do is when you are given a signal from here to sell, you want to wait for a little while, or you want to go straight to your demo account, okay, and place that sell. Okay, place the sell on your demo account and watch how the market is playing, so that if the market is currently doing a pullback, if the market is doing a little pullback, you would observe it with your demo account. And then when you notice the market beginning to go the sell direction, you want to make sure you watch out. And once the market has crossed over the position where you placed your entry, and then you see yourself running in gain on your demo account, then you can go to your real account on a responsible on a responsible, what did I say again, on a responsible lot size, you can place your sell. Okay, another thing can happen again. You can get a signal from this junction and they tell you sell. You want to go to your demo account and place that sell and watch how the market plays. There could be little pullback again like this. All right, and then if this is where you took the sell from on your demo account, you want to observe how the market plays, and once you notice the market now crosses your entry point, you can now go to your real account on a responsible lot size, place the sell. For instance, I gave a signal in the VIP group at this junction. This was where I gave the signal, and I placed my stop loss close here. All right, so wish I placed the stop loss higher, we would have been in profits. Well, unfortunately we actually went in loss as the stop loss was hit. Okay, so this is exactly what I'm explaining. You get to see that there was this pullback and then the trade started going our way. This was when I gave that signal last night, buy step index and the stop loss. Okay, so the pullback occurred and hits our stop losses. Even I myself, I should have placed my stop loss as at least somewhere here. That was the mistake I made, or I should have placed it somewhere here. So I had to place the stop loss so close, and this little pullback hit our stop loss for the trade. And now, as you can see, the market has really gone massively bullish. So this is why we need to make sure we be careful using our demo account to test run. All right, when you get a signal, use your demo account to take off all the pullbacks that will occur before you place your entry whenever you get signals. Let's go to a buying scenario. Now let's take, for instance, you get a signal from here, okay, from this junction, and then they say buy this currency or that currency or volatility or whatever. Okay, from here you want to go to your demo account and place the buy. Okay, maybe the entry was from here. When you place the buy, you want to observe how the market is moving. So there could be pullback like this. All right, and then the bullish trend begins again. And once it has crossed your entry point, what do you want to do? You want to go to your real account and then do what? Place the buy. Okay, these are also tricks on how to get those sniper entries. Okay, because we traders, especially we who have a larger account, we can decide to risk placing our buy from here and risk all these pullbacks because we believe that the market might end up going back. All right, but if you have a small account, especially those who have little accounts, that your account might not be able to hold the gravity of the pullback, what you want to do is to use your demo account to observe the market. So when the market does normal pullback and then crosses your entry points, okay, crosses your entry points and begins going bullish, you want to place your buy. Okay, and you always notice there will still be rejections. This is another rejection that might put you into fear. Another buy, little rejection, another buy, little rejection, another buy. It's forex, all these things happen. Okay, so this is a little secret on how to follow signals. Then I'll give you a little training on risk management. So you must always understand that there will always be pullbacks like this. All right, there must always be pullback like this. I'm making this video most especially for those handling a small accounts, so that you don't get your account blown due to pullbacks like this. Okay, so you need to be very careful. All right, need to be very, very careful, and always make sure you stay on a low lot size, on a very responsible lot size. Don't take high lot size because you want a quick money or what. Forex is not a place for a quick money. Okay, Forex is not a place for quick money. Always trying to make sure you stay on a low loss side. Build your account little by little, gradually. Rome was not built in a day. You cannot build a little account to become high and large in a day. It's not possible. All right, so be responsible in your lot size. Don't make sure you don't ever lose more than 2% of your account. If you know how much your account is, you should go and do the ratio, do the arithmetics and everything, and know how much 2% is worth to your account. Okay, once you figure it out, you should know what you should be willing to lose per trade. All right, you should know what you should be willing to lose per trade. If you are handling $100 account, okay, if you're handling $100 account, risking 2% of per trade, then it means you don't want to it means you are willing to lose at least $2 per trade. And for you to be able to lose $2 per trade, you should know that if you want to be profitable in this kind of a little risk to reward ratio, it means you should stay on a low lot size. Okay, 1 or maybe 0.02. okay, stay on a low lot size, so that even if there's a pullback like this, as long as this, it won't get up to $2 before it starts going back up. Well, if you go and place a trade with a high lot size like 0.01, okay, by the time this pullback comes like this, you end up being in a loss of something like $5 or even more. So that is why your lot size is very important. If you're handling a $50 account, okay, if you're handling a $50 account and you want to grow this $50 account, you must be willing to accept the fact that if you can make at least $5 a day is something. $5 plus $50 is $55 a day. Another day, even if you make $2, is still something. The fact is, you're increasing this $50 every single day. All right, don't ever risk more than 2% of your account. To stay really safe, you can risk at least 1%. 1%. Don't ever risk more than 2% of your account. It's very, 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 very important. If you get to notice my trades, whenever I give you guys signals, okay, and I post my winning trades to you guys, you always notice I'm always on the lot size of 0.50. all right, that's what you notice. Both currency pairs and volatility, you always notice I'm on 0.50. And I always advise you guys, do not follow me, because you might be so excited on, oh, how much Team Legend made. You wouldn't know that I am risking 50% because is equivalent to the account I have. All right, is equivalent to the account I have, and I tell you the fact that this 50%, this 0.50 lot size you see me risking or using to trade, is, if I make all my calculation, it does not cross 5% of my accounts. I don't risk more than 5% of my accounts. So when you see me using this kind of lot size to trade, don't think I'm just trading because I want to increase my money quick. No, I'm making sure I'm sticking to my 5% risk to reward ratio. Okay, so that's what you must know about what I do when you see me trading on 0.50 lot size. So if you're handling a $50 account, I advise anybody who is joining for VIP signal should always make sure you have at least $50 to $100 in your account. Don't come to my VIP with $10 accounts, because a lot of people have been on my DM asking me, hey team, I have a $10 account, I want to join your VIP Signal, can I grow these $10 accounts? When I see those kind of messages, I just ignore it. I don't have time to answer those kind of messages. The last person that came to me yesterday, he came with an $8 account. He came with an $8 account telling me, hey Tim, I have an $8 account, I want to join your VIP, I want to be able to grow this account so that I can raise money to join your academy. I told him, hello trader, go and grow your account to $100 before you can join my VIP, because a lot of traders just want to see how they can make quick money. It's not easy to make quick money in Forex, so you have to be careful. If you're handling a $50 account, you want to make sure you risk at least 1% of your account. 1% of your accounts. So very, very important, which means if you're risking 1% of a $50 account, it means you're willing to risk at least $1 per trade, right? And for you to risk $1 per trade, you should know that you should be on a very little lot size so that you can handle pullbacks like this. Okay, so that you can handle pullbacks. Alright trader, you want to make sure you risk 1%, or if you're gonna risk at most, you risk 2%. 2%, knowing that you're willing to risk $2 in each trade you take. So if the trade goes for you, you increase your $50, and if it goes against you, instead of losing much, you lose nothing less but $2. So if you lose $2 from $50, you still have $48, all right, to trade with, and you still have so many more trades that you can still take. But if you risk a higher percentage of your account, you might end up trading only 3 times with your $50 account and you blow it up. But when you're risking little, you have an opportunity to trade at least 10 to 20 to 30 times before you blow that account. So you must be very conscious of how much you are risking. Very, very important. I'm making this video because people were asking me how much lot size should I use to trade with your Signals team. So that's why I'm making this video right now. And I'm also making this video for the sake of those who are taking Signals to trade, both on my free channel or in my VIP, so that you know how to prevent some certain pullback losses. All right, using your demo account to understand where the market is going. Okay, so I hope with this video you've got to understand a little about how to risk in your trading account, and also you have learned how to prevent pullback losses. I call it a pullback losses, okay, because it's a trade where you are asked to buy, all right, and then a pullback occurs for a while before the trade goes your way. That pullback has blown a lot of people's accounts, especially the people who fail to put stop losses. If you fail to put stop loss, trying to use your own mind, emotional mind, to stop your losses, you end up blowing your accounts. I taught this sometime early in my Telegram channel. You don't place mind stop loss. Some people place mind stop loss. I used to do that in my early days of trading. Okay, I would say to myself, okay, if the market gets here, I'll stop. And then when the market crosses it, I'll be like, man, it might end up going up soon, so let it get here, and I'll stop. And the market will cross it, and you say, oh no, I believe it's gonna go. Before you know, you blow your accounts. So always make sure you put that stop loss automatically, so that when the market gets there, you let it stop by itself. Don't use emotional stop loss, else you blow your accounts. And another thing, finally, that thank God I remembered, if I give you a signal and I place a stop loss, let me clear all this. If I give you a signal, okay, and I place my stop loss here, and I give you the signal from, let's say, from here, if you know your account cannot handle a whole large stop loss like this, trader, I advise you trail the stop loss a bit higher. Okay, trail the stop loss a bit up higher, so that it can handle your accounts, because I might give you a stop loss according to maybe the account I have. Okay, maybe my stop loss, I might place it here, and then I give you a signal from here, and then this pullback comes. Your account might get blown by the time the pullback gets to this level. Meanwhile, the stop loss is still far away. So always know that's why I said don't risk more than 1 or 2% of your trading accounts. And that's why I also taught you how to follow signals with using your demo account. So these two things I've taught you today, which is your demo account following of signals, and your risk, your 2% or 1% risk is going to enable you prevent blowing your account so quickly. All right, rather it's going to help you grow your account. All right, so make sure you follow the rules I've taught you. I'm sure a lot of people might skip the video, a lot of people might not watch it, but for those who watch it and those who have watched it to this extent now, congratulations to you, because you have learned something, and make sure you apply it. Okay, then for those who wants to join my academy, the discount is still on till the end of March. $50 to join my academy till the end of March. The discount is still on. Once the March ends, I'm sending it straight to $80. And you should know that opportunities like this don't last, so you should be quick in what you're doing. Make your decision whether you want to join or not as quick as possible. All right, so that's for that. And for the meantime, I remain your one and only Forex Q coach, Tim Legend. Keep winning, traders.